So a company, Andrew, is made £1,000,000 in profit. It's got £200,000 in the plant and machinery pool, okay? Group category, yeah? No, sorry, forgive me, 2 million. And it's got a million in the special rate pool, okay? And the rate of capital allowances here, by the way, is determined by the government. We don't choose this. So we can claim 18% of the plant and machinery, which gives us 360, and we can claim 8% of the special rate pool, which gives us £80,000. Before I go any further, you can claim less than 18% of plant and machinery, but you can't go over 18%. So it could be 18% or a number lower than 18%. I'd say claim the whole lot. Unless you're selling the property, claim the whole lot every year. Because you create a taxable loss, remember? And carry it forward, and then get the advance next year. Because if you don't, this number here, which you'll see in a minute, is going to be lower next year, because you're going to write off the 360, so 18% of that is going to be reduced, isn't it? Yeah? So now, you've got a million, less 360 from the plant and machinery, less 80 from the special rate pool, so you're paying tax on 560. Everybody with me so far? Andrew, you okay with that? Ashok Bhai, you okay?
Yeah, I'm fine.
Yeah, okay. Now I go on the next slide. So we had £1 million profit. If you don't claim capital allowances, we pay 19% tax on £1 million. That's 190 grand. Everybody with me? But because we've got the capital allowances of 360 plus 80 grand from the previous slide, our taxable profit comes down to 560. We pay 106,000, just over 106,000 pounds in tax. So we've saved here 84,000 pounds in tax. Everybody with me? Andrew, Motiul, you with me? Yeah? Okay, so a good saving. Sorry, Brian, yeah.
Is there, did you know you've got the super deduction allowance as well?
Yeah.
Would that be in addition?
That's in addition to this, yeah.
Wow. Okay.
That's in addition to this, yeah. Then you've got, so now let's look at your pool, just to kind of explain how that works. You had 2 million, remember? We wrote off 18%. You've now got 1640. In year 2, you start off with 1640, write off 18% of that. Can you see 295 is less than the 360? Yeah, that's why we're saying every year use up all the 18%, because as the figure reduces, the percentage gets smaller. Then in year 3, so end of year 2, your balance is 1344. Year 3, you start with 1344, take 18%, you've got 242, gets smaller and smaller and smaller and smaller. It takes you about 15 years at 18% to write off 95% of the value of the capital allowances. So you've got quite a few years to go at. But obviously the allowance in year 14 is going to be much smaller than the allowance in year 1. Yeah? And the same over here, by the way, in the special rate pool where you get 8%, first year you got 80 grand, next year you got 73, 67. So this lasts you longer because it's a smaller percentage. So by year 15, you've used up 71%. Everybody with me so far, yeah? All right, Tiho.
And once you do the incorporation,
Yes.
right, let's say, for argument's sake, you've used up 70%, so you've got 30% left. Can that go with?
Yes, that's right. So you make a special election saying, because I'm incorporating my business, I'm going to carry forward the capital allowances, okay, at the tax written down value.
Okay.
Because, and this is a good question, by the way, because if you sell your property and you sell, and the value of the capital allowances, okay, is more than what you've actually used, you've got to pay tax. If the value is less, then you get tax relief. Yeah. So Brian, in this example here, let's say we had £1 million. We used up 70%, so we used up 700 grand. We've got 300 grand left.
So that goes
if we incorporate and go into the company and say the capital allowances value is 400 grand, but it was 300 grand in the LLP, then Blandine will have to pay tax on £100,000 because she used up 100 grand too much. Okay, so that's why we just do the tax written down value and say it's moving into the company at 300 grand, so she pays no extra tax.
Okay.
And the company's got 300 grand to use going forward. Yeah? Everybody okay with that?
You don't lose them. Yeah.
Yeah,
Fantastic.
yeah. You won't lose them. Now, again, without boring you, these are the different pools you get. You have a main pool, special rate pool, enhanced capital allowances, short life assets, long life assets, contribution allowances. We don't want to get into all this. I don't want to bore you, but I'm bringing it to your attention just so you have an awareness of what exists out there. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.